It's a gap down, and it is a 0.5% gap down, which is entirely on expected lines. 33 points down for the Nifty, 50,300 on the Nifty, at least in the initial trades have gone. Our technical experts had indicated this to our viewers on Friday that the market technicals were looking slightly tired and slightly toppy. So if you follow Ashwini and Mitesh, well, you actually would be making money in this trade now. 33 points down on the Nifty, and for the Bank Nifty, it's a cut of about 0.5%. For the Sensex, again, it's a cut of about 0.5%. You want to start with ICICI Bank, DLF and JP Associates. For the week gone by, they were the best performing large cap stocks. DLF is off to a flat start. ICICI Bank is off to a okay start. And then if you check on JP Associates, JP Associates, the momentum clearly is on the downside. It is at 76.5. Let's look at the IB list where they have accused broker Ketan Parekh for price manipulation, and the stocks are Diwan Housing, Goenka Diamond, some liquid names here, Orchid Chemicals, IBRCL, Pantaloon, and then GMR Infra. GMR Infra 3% down, Pantaloon Retail 185 rupees, GMR on your screen, followed by TBZ, which is down by about 5%. So price rigging list which was released by IB department over the weekend. Those stocks are literally getting hammered out of shape. All these stocks are down by about 3.5 to 4%. Then you will check on large cap IT stocks. TCS and Infosys, they both are due to declare numbers this week. Infosys ahead of numbers, down by about 35 rupees, and TCS is really going the other way around, 1255 rupees for TCS. So the big trade orientation this morning is that it's a gap down for the Nifty. Mid cap stocks are coming under pressure, and most of the real estate stocks, which appreciated by about 3 to 4% for the week gone by, they are off to a flat start.
Okay, just want to talk about some other stocks which are in focus this morning. Like we've been telling you, the Intelligence Bureau has picked up stock broker Ketan Parekh's name in major stock market scam, and that includes some of the names or other companies mentioned include the likes of Diwan Housing, Orchid Chemical, IBRCL, Pantaloon, TBZ, as well as GMR Infrastructure, and all these stocks have started off well in the red. So GMR Infrastructure is now down 4%, a 4% cut coming in for TBZ as well. You've got a Pantaloon which has seen a fair amount of run up in anticipation of FDI in retail. That stock's off fair amount of traction, but today it starts off down by about 3% or so, and Diwan Housing and Orchid Chemical are some other names which are looking weak. DLF, like I said, the MC inspection has found no account of falls in DLF, and the stock has started off a good 1% higher in trade. You've also got 5 US-based retailers which have sued Ranbaxy and Pfizer for Lipitor generic delay. That is what some of the newspaper reports are indicating this morning. So Ranbaxy and Pfizer, both those stocks have started off in the red. Piramal Healthcare, the stock goes ex-dividend today to the tune of about 17.5 rupees per share. You've also got Care India, watch out for that one as well, which is in focus. They're looking at investing about $6 billion to pump more crude in 2 years, and also have sought contract extension for the Rajasthan block. That is something that you read first in the Economic Times this morning. Ken has started off absolutely quiet in trade. One stock which is in focus, in Engineers India, they have bagged a 720 crore rupees BPCL contract, and EIL has started off with a gap up start. It's a good 4% in trade right now, so that is one stock which is in focus.
Okay, here's the story for the market breadth. The market breadth is not impressive. Now, for the week gone by, the small cap index was up by about 4.5%, but today the small cap index is off to a rather weak start. 0.5% down for the small cap index, 0.5% down for the mid cap index as well. Auto as a basket, Auto as the index is down by about 0.5%, and then the BSE Power Index is also down by about 1%, followed by the BSE Bank Index, which is also down by about 0.5%. So I'm afraid the market breadth is not impressive. Cracks had surfaced up on Friday itself, but if you stay, at these levels, which is closer to 50 to about 50,300 for next 2 or 3 days, I guess that's a victory for the bulls. Because if markets remain range bound, or if benchmark indices they remain range bound, the confidence to trade mid and small cap stocks will only increase like it has increased in last 10-15 days.